Combinations of strategies may offer better opportunities. We can combine indicators together or patterns together, or even better, indicators with patterns so that we get an extra confirmation factor. In this article, we will see how to use Heiken Ashi charting alongside moving averages as trend confirmation technique. And then at the end, we can look at optimization options. The Heiken Ashi candlestick method. Candlesticks are a quick way to understand OHLC data and detect patterns. It is very straightforward and easy to interpret. A bullish, typically green, candle is when the market closes above its opening price. A bearish, typically red, candle is when the market closes below its opening price. Let us see a full chart of candlestick to understand more how it is shown. The trend is clearly bullish with some corrections seen around the red candles. Notice the small candles where the opening price is almost the same as the closing price. This is called a doji and signifies indecision and shows a possible reversal or consolidation. The Heiken Ashi, also called Heiken Ashi, candlesticks seek to clean out the picture and show a clearer trend by smoothing out the OHLC data. The concept of moving averages help us confirm and ride the trend. They are the most known technical indicator, and this is because of their simplicity and their proven track record of adding value to the analyses. We can use them to find support and resistance levels, stops and targets, and to understand the underlying trend. This versatility makes them an indispensable tool in our trading arsenal. EMA stands for the exponential moving average, which is an indicator used to pinpoint the most influential trend in the market while also indicating the support and resistance level needed for trades to be executed. On the other hand, Heiken Ashi is a price chart similar to candlesticks but is believed to be capable of displaying more accuracies in the price trend. Heiken Ashi translates to average bar in Japanese. It works by averaging out the price movements in a proper candlestick chart because it shows trends and reversals better to make things clearer for the trader. It has a wide range of functions, like supporting short-term strategies whether it is for swing trading or day trading. Additionally, Heiken Ashi is quite useful in any market including indices, forex, stocks, and commodities. Basically, it can truly enable traders to identify trends in order to stay in winning trades. However, like every forex market concept, an adequate understanding is being required for maximum advantage. You'll find a better explanation about how Heiken Ashi and EMA collaborate in this article. Heiken Ashi candlestick. As mentioned earlier, Heiken Ashi is a variation of a candlestick chart that is calculated differently. Normal candlestick charts represent the opening and closing prices with the thick part of the candle, known as the real body, while the high and low prices are represented with upper and lower shadows. The patterns represent exact values of open, high, low, and close prices, OHLC, for the asset during a particular time frame without any form of data manipulation. Heiken Ashi has similar features to a typical candlestick chart, except that the OHLC values are different for the underlying assets. Rather, its OHLC values are based on the average prices of both current and prior time frames, hence, making the chart smoother to read along and allowing traders to spot the prevailing trend. Calculating the Heiken Ashi values. To utilize Heiken Ashi values, there are 4 different calculations for the open, high, low, and close of a Heiken Ashi, Ha, candle. 1. Ha close is calculated by determining the average of the actual open, close, high, and low price of a specific period for an asset. 2. Calculating Ha open is done by finding the average of prior Heiken Ashi candles open and close. 3. Ha candle high is identified as the highest of 3 price levels seen as the prevailing high price, the prevailing Ha open price, the prevailing Ha close price. 4. And the last part is Ha low, which is the lowest of 3 price levels seen as the prevailing low price, the prevailing Ha open price, the prevailing Ha close price. Using Heiken Ashi is, without doubt, very helpful because it does take the correct price levels of the underlying assets before converting those prices using the Heiken Ashi formula. This is why the price values of Heiken Ashi usually differ from those on a candlestick chart. For a candlestick chart, the current price signifies the latest transaction, while on a Heiken Ashi chart, the current price is the latest calculation of the Ha close price. It's extremely common for these numbers to differ sometimes. As mentioned above, Heiken Ashi is mostly used to fine-tune price data and identify trends and reversals. It should be pointed out that the prices seen on this chart can